Hello and welcome to this video. In this video, we are going to do a A-level question from paper 3, May-June 2023, variant 31 and 33, both are same. Question 3. The directors of W Limited, a manufacturing company, have provided the following information for the year ended 31st December 2022. Revenue $984,000, purchase of raw materials $198,000, direct labor $164,000, carriage inwards $3,100, carriage outwards $6,200, factory overheads $98,000, administrative expenses $223,500, selling and distribution cost $84,000, rent and rate $74,000, factory machinery at cost $144,000, office equipment at cost $66,000, delivery van at cost $48,000, inventory at cost at 1st January 2022, raw materials is $8,000, work in progress $17,300, finished goods $45,000, provision for depreciation at 1st January 2022, factory machinery is $84,000, office equipment $32,000, delivery van is $28,800. The following information is also available. W Limited maintained a provision for unrealized profit account. At 31st December 2021, finished goods were transferred to the trading section of the statement of profit and loss at the cost plus 20%. At 31st December 2022, the finished goods were transferred from manufacturing account to the trading section of the statement of profit or loss at a transfer value of $632,400. The inventory were valued at cost at 31st December 2022 as follows. Raw material 10,500, work in progress 16,900, finished goods $52,000. Rent 6,000 was accrued at 31st December 2022. Rent and rates are to be splitted between the factory overheads, the administrative expenses and the selling and distribution cost in the ratio of 5:2:3 respectively. Depreciation is to be provided as follows. Factory machinery 15% per annum using the reducing balance method. Office equipment 15% per annum using the reducing balance method. Delivery van 20% per annum using the straight line method. In the A-bit of the question, we are asked to explain why a manufacturing business may provide for unrealized profit. Unrealized profit is the profit which has not yet been released or not earned yet. So based on the prudence concept, we should not record the profit unless it is released. Hence what we do is we take the unrealized profit and deduct it from the transfer value, and hence we value the inventory at cost, not at the transfer price. In the B bit of the question, we are asked to prepare the manufacturing account for the year ended 31st December 2022. So before making the manufacturing account, let's do the working in our working notes. It was given that rent of 6,000 was accrued on 31st December 2022. Accrued means this is outstanding, but this was for the period for which we are making the manufacturing account. Hence, it will be an expense for this period. So we are going to take this rent as well when we calculate the rent and rates. It was further mentioned that rents and rates are to be split between the factory overheads, the administrative expenses and the selling and distribution cost in the ratio of 5:2:3 respectively. The rent and rate which was given was $74,000. To this we will add this accrued rent of $6,000. So we'll get the total as $80,000 for rent and rate. Now for factory overheads, what we have to do, we have to divide it in this ratio, that is 5:2:3. 5 is for factory, so 5 divided by the total, that is 5 plus 2 plus 3 will be 10. So it will be 80,000 times 5 by 10, which will be $40,000 for the rent and rates for factory overheads. And the factory overheads which was given was $98,000. To this we will add this $40,000. So now our total factory overheads will be $138,000. Next, it was mentioned that the depreciation is to be provided as follows. For factory machinery, it is 15% per annum using the reducing balance method. So, when we talk about the reducing balance method, what we will do? We will reduce the cost to the net book value. So, how do we do that? We'll take the cost of the factory machinery which was given as $144,000 From there, we will subtract the provision for depreciation, which was given as $84,000. Now we'll get the net book value as $60,000. And for this, that is for the net book value, we will find the depreciation as we are finding it on the reducing balance method. So this NBV will be taken as $60,000 times 15%, which is the depreciation. So we'll get the depreciation for the year ended 31st December 2022 as $9,000. Now let's proceed and make the manufacturing account for the year ended 31st December 2022. We'll start with the opening raw material inventory, which was given as $8,000. To this we add the purchases, which was given as $198,000. To this we add the carriage inwards, which is the transportation cost for getting these purchases. So this will be added as $3,100. From there we will subtract the closing inventory, which was given as $10,500. Now we'll get the cost of raw material consumed as $198,600. To this we add the direct labor. So direct material plus direct labor will be our prime cost, which will be $362,600. And then we will add the depreciation, which we have calculated in the second working notes as $9,000. And we also add the factory overheads, which was calculated as $138,000. So we'll get the total as $509,600. To this we add the opening work in progress, which was given as $17,300, and we'll subtract the closing work in progress inventory, which was given as $16,900. We'll get the cost of goods manufactured as $510,000. It was given in the additional information that the transfer value was $632,400. So now our factory profit will be the transfer value, which is $632,400. From there we subtract the cost of good manufactured, which we have calculated as $510,000. We'll get the factory profit as $122,400. So this is how we complete our manufacturing account. In the C-bit of the question, we are asked to prepare the statement of profit or loss for the year ended 31st December 2022. So let's start with our working notes. It was mentioned that the finished goods inventory was mentioned at cost, and whenever we transfer the finished good inventory to profit and loss statement, we transfer it at a transfer value. And what is this transfer value? This will be cost plus the factory profit. And it was given that on 31st December 2021, the factory profit markup was 20%. So first we will find the factory profit, which was 45,000 times 20%, which is equal to 9,000. So the transfer value for the beginning of the inventory, that is the opening finished goods inventory, which have to be transferred to the statement of profit and loss, will be $45,000 plus $9,000, which will be $54,000. Or you can do the same thing by using this, that is we take the cost of the inventory, to this we add the factory profit to get the transfer value. So if we take the cost as 100%, and here it was mentioned that the factory profit on 31st December 2021 was 20%, so this will be total as 120%. So if we take 45,000 times 120%, we'll get the same answer as $54,000. Now let's calculate the closing finished goods inventory. Again, we have been given the cost of closing finished goods inventory, and we have to transfer it to profit and loss statement at a transfer value, and this transfer value should include the cost plus the factory profit. However, we don't know the percentage of markup or factory profit. Why? Because for the year ended 31st December 2022, it was given the transfer value in additional information, and we have taken that and we have calculated the profit for the year, that is the factory profit for the year, in our manufacturing account in the bit B of the question. Now what we are going to do is first we'll find the percentage. How we'll do that? We'll take this value, which was the value of the cost of goods produced during this period, that is 31st December 2022, and this was $510,000. If this is 100%, the factory profit which we got in bit B of the question was $122,400. So this is how much, when we cross multiply it, it will be 122,400 times 100% divided by $510,000 will get the value as 24%. Now this is the percentage of factory profit which was applied during the year ended 31st December 2022. Now what we are going to do, we are going to find the value of closing finished goods inventory which we are going to transfer to the profit and loss statement. So for this was given as the cost of the closing finished good inventory as $52,000. And to this, if we apply 24%, we'll get the value as $12,480. So this will be the factory profit which will be applied to the closing finished goods inventory. So we take the cost, that is $52,000 plus $12,480. We'll get the transfer value as $64,480 for the closing finished good inventory. Or what we can do it in the same way as we have done here, that is 100 plus 24. So it will be 124%. So it will be 52,000 times 124%. Still we'll get the same thing as $64,480. So this part, that is where we are calculating the closing finished good inventory. Either you can find the profit separately and then add it to the cost and find the transfer value, or you can take the percentage as a total percentage, that is 100 plus 24, 124%, and then calculate it by multiplying it with 52,000. You will get the same value. You can use either of the method. Now let's discuss about the provision for unrealized profit. You see at 31st December 2021, that is on 1st of Jan 2022, where we will bring down this balance, the opening balance for the finished good inventory was, the value which was given at cost was $45,000. And to this we have added the markup or the factory profit percentage. We got the value as $9,000, and this is the profit for the opening inventory. And for the closing inventory of finished goods, we have taken the cost of $52,000, and to this we have multiplied it with the markup or the factory profit of 24%, and we got the value as $12,480. And if we see this difference, the difference is of $3,480. That is, this shows that the closing inventory value was high, as well as the markup percentage of this closing inventory was high. Hence, when we subtracted the opening profit and the closing profit, we got the value as $3,480 as the profit which has not been earned. Hence, it is negative and hence it need to be subtracted. So based on the prudence concept, this amount have to be subtracted from the factory profit because this has not yet been earned or released. So wherever there is an increase in the factory profit because of the closing inventory of our finished goods, then we have to subtract this. So we have a rule, that is increase in the provision for unrealized profit will be subtracted from the factory profit in our statement of profit and loss. If suppose, just for an example, if the case is opposite to this, that is the opening factory profit was 9,000 and the closing was 7,000, that means this 2,000 which will be the decrease in the provision for unrealized profit is the amount which we have already been earned, and this will be added to the factory profit in our statement of profit and loss. So this is our rule which we have to remember, that is the increase in the provision for unrealized profit will be subtracted from the factory profit in the statement of profit and loss, and wherever there is a decrease in the provision for unrealized profit, that will be added to the factory profit in the statement of profit and loss. Now let's find the total administrative expenses. For total administrative expenses, we will start with the depreciation for office equipment, which was given as 15% per annum using reducing balance method. For reducing balance method, first we'll find the net book value. For this, we'll start the factory machinery, which is given at cost as $66,000. From there, we subtract the provision for depreciation, which was given as $32,000. We'll get the net book value as $34,000. And to this, we'll apply the rate of depreciation of 15%. So we'll get the depreciation for factory machinery as $5,100. Then the administrative expenses was given as $223,500. Then we have the rent and rate, and it was mentioned that it is divided in the ratio of 5 is to 2 is to 3. So the rent and rates for administrative expenses will be 80,000 times 2 divided by 10, which will be $16,000, and the depreciation which we have calculated was $5,100. So when we total this up, we will get the administrative expenses as $244,600. Then we will go for the total selling and distribution cost, and for this we will start with the depreciation for delivery van, which was 20% per annum using straight line method. So straight line method, we will apply the depreciation directly to the cost of the delivery van, not to the net book value. Net book value is only for the reducing balance method. For straight line method, it will be to the cost. So 48,000 was the cost, times 20%, will get the depreciation as $9,600. Now the selling and distribution cost was given as $84,000. Then the rent and rate was mentioned. Again, the ratio was 5 is to 2 is to 3. 5 for factory overheads, then 2 for administrative expenses, and 3 for the distribution, that is selling and distribution expense. So now the rent and rate will be 80,000 times 3 by 10, which will be $24,000. Then the carriage outward was given. What is carriage outward? It is the transportation cost which is incurred by the company when they transfer or transport the goods to the customer. So this is again a part of our selling and distribution cost. Hence we are going to add that, which is $6,200. Then the depreciation which we have calculated here as $9,600. So when we total this up, we will get the selling and distribution cost as $123,800. As we are done with all the calculation, let's now proceed and make the statement of profit or loss for the year ended 31st December 2022. We'll start with revenue, which was given as $984,000. Then the cost of sales, in which we have the opening finished good inventory, which we have calculated in the third working notes as $54,000. And the transfer value, which we will bring it forward from the bit B of the question, where we got this as $632,400. Then we add this to, we'll get the value as $686,400. From there we will subtract the closing finished goods inventory, which we have calculated in the third working notes as $64,480. Then the remaining amount which we will get is $621,920, which will be the cost of sales. So we will subtract the cost of sales from the revenue, and we get the gross profit as $362,080. To this, what we are going to do, we are going to take the factory profit, which we calculated in the bit B of the question as $122,400. From there, we'll subtract the increase in the provision for unrealized profit, which we calculate in the fourth working notes as $3,480. Then we'll get the net factory profit as $118,920. So when we add the gross profit and the factory profit, we will get the value as $481,000. Then from there we'll subtract the administrative expenses, which we calculated in the fifth working notes as $244,600. Then we'll subtract the selling and distribution expenses, which we calculated in the sixth working notes as $123,800. Then we'll get the net profit for the year as $112,600. In the debate of the question, we are asked to explain the importance of true and fair view opinion in the auditor's report. You see, the true and fair view is very important in the auditor's report because that shows that the financial statements are reliable, they have followed all the legal requirements as well as the accounting standards, and they have even adopted the business policies in the most appropriate way. It also means that there are no errors in the financial statement, as well as the financial statement represent the true position of the business as well as the true performance of the business. This in turn leads to the confidence of the shareholders in the directors and the performance of their duty. So with this, we have completed this question. Thanks for watching my videos. Have a great and peaceful life.